So right now, inflation is going down. And we're seeing signs that employment is stabilizing. Like there was 114,000 jobs created in the month of June, and the market was expecting 185,000. So 114,000 is not chump change, but that jobs report showing that it came in smaller, it actually dropped rates by 0.5% last week. So last week, almost every single day, you could see, look at this green bar going up. That means there's a lot of investors going into the market. That means we actually like to see what is going on. So for instance, I sent my weekend market update. If you're not on this text, let me know, because I'm giving you the end of the week rates every single weekend. July 27th, conventional was at a 6.875. By Friday of last week, we were at a 6.375. So rates did drop in 1 week time from a couple of economic reports, or the sentiment around it. So this right here, before we talk about anything else, there should be a reason where you're picking up the phone and just being excited about calling the people that were on the fence. Because it looks like whether, they're ready now, it doesn't matter. The light is at the end of the tunnel, so you can be ready to start selling, or you can be ready to start buying because it's becoming a little bit more affordable. With that said, rates change every single day. So each one of these bars represents a day in the market, and it's like a heart rate monitor. And so, as you know, I could say, hey, we're at a 6.3 today, and then tomorrow I could be like, JK, we're at an 8%. That's just how the cookie crumbles sometimes. So it's super important to stay positive about it and let those conversations happen on my end, where I can time the market a little bit, where you're just going out and selling. Like, these rates are amazing, they're getting better. Heck, we're mid-fives for FHA and VA. I mean, that's fantastic news. Then Sunday night, Japan happened. So we had this great week. Mortgage rates are doing really great. And then all of a sudden the global economy kicked in. So Japan, and this is actually interesting, and it's going to be relevant to the stock simulator that I'm going to talk about. Japan is the 5th or 6th largest economy, and they don't have natural resources. They're based on their productivity only, so they're a super unique economy. You could walk, outside and see a bunch of cars from Japan. They're everywhere in terms of production. Well, they have a different monetary policy. They're actually trying to take their economy straight digital by 2025. So their policy, instead of our Federal Reserve, when things started getting better, our Federal Reserve started increasing rates to make it where you can earn 5% on your savings account. Japan's Federal Reserve said, we're not going to increase rates. In fact, we're going to keep them low. Or at one point, they were actually negative. You have to pay to be a part of our bank. And so what that did is it opened up an opportunity to invest. So Mandy, I'm going to go to you, and I'm like, man, I found this great opportunity to invest in. I want to take $100,000 from you. Sandy, I need $100,000 from you. Steven, you're rich. I need $1 million from you. So I'm going to take all of this money, and now I'm going to go to these Japanese bonds that are super low cost, and I can borrow against them for like 1% interest. So I'm taking our, let's say 1.3, 1.4 million, and then I'm going to borrow against it at 90%, and then go over to the US economy and buy high yield, high risk stocks. So I'm taking all your money, I'm putting in the bond market in Japan. The bond yields are essentially paying the interest on the loan I'm about to take out from them. So it's free money. Now I'm taking that free money and I'm spinning it around to high risk stocks. So I'm having a little fun. So I'm playing the global markets game. So what happened was Japan came out and said, I know we've had some super low rates around here, but guess what? We're going to hike it up a little bit. We're going to hike rates. And so what happened, $20 trillion of the money supply was in this type of investment called a carry trade, where people leverage the super low rates over here to buy stocks over here. So what happened overnight on Sunday night is Japan came out and said, we're actually going to raise rates a little bit. And all of the banks said, okay, we got to check all you people that borrowed money that you can actually repay it. So we had a bunch of people selling, like the tech market went down. We had a bunch of sell-offs yesterday in the stock market, which increased our interest rates a little bit. So we became millionaires overnight. Guess what? Mandy, Sandy, Steven, we're millionaires. We did great. We made so much money. But then it kind of blew up on us. And so yesterday, our rates got a little bit worse. We had a little bit of a sell-off in it, and it got a little volatile. So we went down from a 6.3 to maybe back to a 6.5% just in a singular moment because of the economy. It really had nothing to do with us other than rich people playing with money, which can continue to happen, right? But we're still going good. So what does it actually mean for us? So you might have heard in the news, and I've probably had a dozen conversations with past clients, agents, or just different people calling me to say, hey, oh my God, is it a good time to buy? Is the economy shaking? I heard there was a sell-off yesterday. What's happening? Look, this is a 5-year Dow Jones Industrial Average. It's just a blip. Yesterday was a sell-off. We lost, I think it was 20% that was lost yesterday in Japan. It's already gained back 10%. So it's just a blip. So if you hear any clients fear of any sort of sell-off, it's not the big sell-offs that you have to be concerned with. It's the steady declines that actually matter. So just in case someone calls you, that is what happened. It did impact us. Now let's talk about elections. I heard Josh talk about it a lot. Look, I did so when I was going to college for economics, I was in this industry. And I was actually doing reports. I probably did 2 or 3 10-page stupid reports on how elections can impact mortgage rates or the real estate market. And the reality is, yes, there's certain patterns, but the patterns are not because of the elections. The patterns are because where the economy is. So this is straight from Sacramento. I didn't have time to pull it from Riverside, so I just took Sacramento because it's easier to pull. But if you look at it, where rates are up or down, or the housing prices are up or down, this is MLS sales, it's in line with how we were tracking at that moment in time. There is not much of a dip or an increase because of the election year. Typically speaking, though, almost every year after the election year, that's when house prices start going up. That's when sales start going up. So there is quite a few clients that I speak to that are like, hey, we're on hold because it's the election year. That's not impacting us. What impacts our world is the monetary policy. What impacts our world is investors. So you make sure you want to talk on that yeah, it's an election year, but it's not really doing much for us right now. It's fine. All of that to say, because I had so many comments or so many conversations yesterday with, what's happening with Japan. Oh my God, I heard that we're going into a recession. Is it a good time to buy? Oh, it's an election year. I think I'm going to hold off until after it. Like, you're missing out on the appreciation that is real estate. You're missing out if you buy a $600,000 house and you wait. You're missing out on that 5% appreciation. That's $30,000. You're missing out on that tax write-off. A $600,000 house is, I don't know, $6,000 to $10,000 in tax write-off. You're missing out on those things. So you have to stay focused. Tune out the noise for your clients. Get rid of the emotions for your clients and just sell the benefits of homeownership. It is still, so the facts of mortgage rates, inflation is going down. Unemployment is becoming healthier and healthier. We need unemployment to go up. Maximum employment for the US economy, there's no exact definition, but maximum employment is right around 4.5% unemployment. We actually need that. It's a good thing. That means that corporations are in check a little bit. That means people are not spending they're out the mother freaking tree going off and going to the mall every 2 minutes where corporations have to stack employees. So job creation is calming down, but more importantly, yes, Japan is volatile, the stock market is volatile, but the safest, least volatile investment you have is real estate. It's an appreciating asset. So 70% of millionaires, I've heard statistics up to 90%, are made in the US because of real estate. This is what your average Joe, we buy real estate and we make money off of it. You have to stay focused in selling something. I'm so tired of the noise. Yes, I know that the new lawsuit, the buyer's broker agreement, I know all of the things that we're running into and the uncertainty. I know it's constantly like, what are mortgage rates doing? Are they raising? Are they lowering? I get it. Everything we have right now is uncertain. So stick with something and sell it. If that week you're like, hey, Laura said that rates went down by 0.5%, then call everybody you have and talk about rates going down 0.5%. If you see news that inventory is, sitting for a little bit, call every buyer and say you actually have a bigger opportunity right now. If you see inventory is ticking down again, great, call the sellers. They're going to get more return. What I see a lot of times when I coach over and over and over is like a failure to launch, that you don't pick up the phone and call, that you don't just say hello and have a conversation of what's going on. Maybe it's because you're fearful of who you are. Maybe you're fearful of being an advisor or saying the wrong thing. It doesn't matter. Just do your research, be sure of it, and talk about it. You're just having conversations. So I'll give you something to sell. Line of duty death benefit. I've talked to you a little bit about it before. I am offering a $500,000 insurance to anybody that is in, so it'd be EMS, it would be police, it'd be fire, anybody that is in a line of duty, if it's a work-related unfortunate accident, whether it's a heart attack or whether it's a stressful event, that I'm doing every client I have that is in this type of line of duty, I'm doing a $500,000 insurance that will cover their mortgage for their family, up to $500,000 that is, in the event that they die. So this is one reason that you could just call and say law enforcement, fire rescue, volunteers, EMS, anything at all. Just sell something. Pick up the phone and have a conversation around it.